So welcome back to module number 4 of our mini course, Catching Market Tops and Bottoms Using Elliott Wave Theory. Module 4 is about setting price targets. So I'm going to go through using larger wave structures to find likely targets, using Fibonacci projections within wave analysis. I'm going to go through common wavelength relationships and how that gives you targets for particular price moves of a structure. So we're going to go through how that translates into charting and trading again, and we'll go again into our dollar-yen example, and again what it means for the overall trend move, what an overall price target for this market would be using these techniques. So let's get down in there and get to the charts. Okay, so setting price targets using Elliott Wave Theory. First I'm going to go through the wave A-B relationship. So we know that the dominant trend is to the upside. We know that we're expecting at least a three-wave move to the upside in an ABC form. But when you've reached the end of wave A, how do you know where wave B is likely to come in? Well, there's a few kind of basic ground rules that you can use to predict the depth of a correction or the likely length traveled of the next trend move. So first of all, we'll go through the relationship of wave A to B. So off the bat, the first thing I always do is when I think a wave is complete, I will get a Fibonacci extension. I'll extend that Fibonacci grid over the extent of the whole wave. Now I know that an A-B relationship is usually wave B will travel to about 50% of the length of wave A. If you didn't know what wave B might look like, you could immediately say that you would at least target the 50% correction. Now this can be used for wave 2 as well, because wave 2 is usually a deeper correction than wave 4. And we'll get in here to this wave 1-2 relationship in a minute. But wave 2 and wave B will usually retrace at least 50% of the previous move. Another point to target for a wave A-B relationship is the low of the previous fourth wave at one lesser degree. Now, the degree we're talking about here in this overall trend move, these large A and B labels here in red, that's one large degree labeling. The next lower degree is the waves that make up the internal waves that make up that wave A and wave B, and they're labeled in blue there. So that would be wave 4 here in blue would be the fourth wave of one lesser degree. So we can get a line and just throw it in at the low here in this triangle. That low at 96. So now using those two scenarios, we have a target range here of between 100 and 96. About 196. It's about a 400-point range, but we know that once wave A had completed, we know that in a wave B we could be expecting that sort of action to the downside. So that's a wave A and B relationship there. How about we look into a wave 1-2 relationship? So we'll get down here into this this lower degree move here. So here we have our wave 1-2 structure off the price low at 75.56. The actual price low was 75.56. So off that price low, we had an impulsive structure to the upside. I'm going to label that for you now. So we had a wave 1 impulsive move, and then we had a wave 2, which actually happened in a flat correction to the low here. And then we had the power move in wave 3, the longest and the strongest wave. And that wave 3 topped out. And then we had a short little correction in wave 4. And then we had 5 internal waves in wave 5 itself. 1, 2, 3, 4, 5. So overall structure was wave 1, 2, 3, 4, 5 waves in wave 1 brackets. Now, from that high, we got a deep correction in wave 2. Wave 2s, and like I said, wave 2 and wave B tend to be a deep correction. So let's go over and, if this corrective form here didn't exist, where would we target? Well, wave 2 would retrace into the territory of wave 1 of one lesser degree. So let's look at that. We can already see that wave 2 here, deep correction right into the price territory of wave 1 of 1 lesser degree. For wave 2 itself, you can at least expect a 50% retracement. Most likely you would get a 62% or 61.8% fib retracement. So let's look at that and see how that actually turned out. So we'll project from the low here up to the price high in wave 1, and we get 61.8%. Now price actually dipped below that, but that would be our initial target. Again, that'll be our initial target zone between 50 and 61.8, with the likelihood that price would dip back into the wave 1 territory. And even at a 61.8% retracement, you can see that the correction would have dipped into the wave 1 at 1 lesser degree, the price territory there. So overall, we can say that a wave 1-2 relationship is quite likely to hit 61.8%. Will definitely hit 50%, quite likely to hit 61.8% retracement, and again, most likely to come back into the price territory of wave 1 at 1 lesser degree. So let's get back out and we'll kind of round off what we just talked about here. So now we've projected some retracements and picked target points and target levels for those. So let's make a prediction for wave C here, the move back into trend again. Let's see if we can read the tea leaves and see what the wave principle might suggest for the top of wave C here. So again, we'll get our trend channel and we'll place it from the price low to be tangential to the wave B low. And then the top trend channel I will project from the top of wave A. So wave C is projected to be in the area of 150. And I reckon it may even top out over that, because a C wave is usually far more powerful than a wave A, so it comes on quicker and it would probably throw over to the top side of the trend channel here. So what we'd expect is 5 waves up in wave C to complete around the 150 area. Another thing we can do again is to get our Fibonacci grid and again project from the price low, and then we take that grid and we move it to the wave B low, and this again gives us another price target at about 148.90. So now we have a very tight price band between 148.90 and 150.55 about. In terms of the length of this wave in points traveled, that's about another 5,000 points to the upside. In terms of the time that it would probably take for this wave to unfold, so let's see what the wave principle might say to us about that. We can take a trend line, and just stretch it between the low of wave A and the high of wave A. The wave principle would say that wave C would travel the same distance in points, but it may well also suggest that wave C will take the same amount of time to unfold. Projecting the time it took for wave A to complete, for taking the time it took for wave A to complete, which is about 4 years bottom to top, and projecting that time from the wave B low gives us another 4-year time scenario, and that brings us out to about 2020. So the wave principle in general would say that wave C to the upside is going to be about 5,000 points when this market has got right back into trend again. It'll take another possibly 4 years to complete. It'll take 5 waves in structure, and when it tops out, we can expect the market to possibly retrace the whole move if this is a corrective structure to the upside. So that's making price projections using Elliott wave theory. The next video is about trade entry and trade entry strategies and stop loss strategies. So get on to video number 5 and we'll show you all about that.